look at the Fed model, do you then think we need to re-rate 10-year earnings yields even higher and lower equity prices?
Well, the evidence there is indisputable. And the question is, where are we in the cycle? We're very near the end of the cycle. In this business right now, given all the volatility, a day is a very long time. If we're sitting here on Friday morning, the world's coming to an end. By Friday at 2, life is great. Here we are Monday morning, life is great. Let's see where we are this afternoon. But generally speaking, we're not going to have a situation where every day where bond yields go up and stocks are going up and vice versa if stocks are down and bond yields are going to go down. We think that in a situation where you're having a supply and demand dynamic, it's possible that bond yields are going to go up, stocks are going to go down, and that the economy as a whole is going to slow because we have tremendous uncertainty with regard to policy in Washington.
Paul?
Yeah, I very much agree with Peter. I think it's not going to be a straight line, but we are in a vulnerable position. I think bond yields are going to go even higher, and we're very vulnerable to bad news. You talked about, the inflation numbers coming out on Wednesday. If we get a high number there, then we'll be down again. I think really there's a reappraisal of value in this stock market, and that's mostly led by perceptions of inflation and higher bond yields. And I don't think we've seen the top for bond yields yet.
So, Paul, what's the consequence of that? Is this a matter of the yields go up, interest rates go up, and then stock prices re-rate, they reprice, and then we're fine, and then we start growing again? Or are we really talking about maybe going from a bull to maybe even a bear market?
Well, we could do. It depends what happens on the inflation and what the signals the Fed gives. If we do get overheating in the economy, the Fed's going to have to slow the economy. It's going to have to raise rates. That's challenging for stocks. And if the economy slows, then the market's going to have to price in a much slower rate of profit increase than it has done so far.